Operating in Cyprus, grappling with the complexities of VAT and indirect taxation. Understanding these regulations is crucial for compliance and optimizing your tax efficiency. This guide provides an in-depth analysis tailored for businesses, accountants, tax advisors, and legal teams. A taxable person is any individual or entity engaged in economic activity, regardless of VAT registration status. This broad definition includes businesses, professionals, and even non-taxable legal entities involved in taxable transactions. A taxable supply refers to the provision of goods or services for consideration within the scope of VAT. This encompasses domestic supplies, intra-community acquisitions, and imports, forming the foundation of VAT obligations. Place of supply rules dictate where VAT is charged, impacting cross-border transactions significantly. For goods, VAT is charged where the goods are located at the time of supply or where transport ends for cross-border deals. Services follow different rules. B2B services are taxed at the customer's location, while B2C services are taxed at the supplier's location. The reverse charge mechanism shifts VAT payment responsibility from the supplier to the recipient. This is common in cross-border B2B services and specific domestic transactions like construction or property transfers under debt restructuring, ensuring VAT neutrality. Imports are subject to VAT at the point of entry into Cyprus. Businesses can reclaim this VAT as input tax if the goods are used for taxable activities, optimizing cash flow. Exports to non-EU countries are zero-rated, meaning no VAT is charged, but input VAT can still be reclaimed, incentivizing international trade. Intra-community transactions involve specific VAT treatments. Acquisitions of goods from other EU member states are subject to VAT in Cyprus under the reverse charge mechanism. Supplies of goods to VAT-registered businesses in other EU countries are zero-rated, provided the buyer's VAT number is valid, facilitating seamless trade within the EU. The One-Stop Shop (OSS) scheme simplifies VAT compliance for e-commerce businesses engaged in cross-border B2C sales within the EU. Businesses can report and pay VAT for all EU sales through a single VAT return in their home country, reducing administrative burdens. Residential properties benefit from a reduced VAT rate of 5% on the first 200 square meters of a primary residence, subject to specific buyer criteria. This incentive supports home ownership. The reduced rate does not apply to investment properties or secondary residences, ensuring targeted application. Commercial properties are subject to the standard VAT rate of 19% on sales or leases. This standard rate applies consistently across commercial real estate transactions. In debt restructuring, the reverse charge mechanism applies to property transfers. The recipient, such as the lender, is responsible for accounting for VAT on the transaction, ensuring compliance. Exemptions are available for property transfers as part of debt restructuring agreements, provided they meet specific conditions under Cypriot law. These exemptions can significantly reduce the tax burden in restructuring scenarios. Cyprus adheres to EU directives on electronic invoicing, mandating specific requirements. Invoices must include details such as the supplier's and customer's VAT numbers, a description of the goods or services, and the VAT amount. Invoices must be stored electronically for at least 6 years, ensuring proper record keeping. Businesses must ensure the authenticity and integrity of electronic invoices through digital signatures or other secure methods, maintaining data integrity. Helios Enterprises Ltd, a property developer involved in real estate, e-commerce, and international trade, demonstrates effective VAT management. For residential properties, Helios applies the reduced VAT rate of 5% for eligible buyers, maximizing benefits. For commercial properties, the company charges the standard VAT rate of 19%, ensuring compliance. Helios utilizes the OSS scheme to simplify VAT reporting for cross-border B2C sales within the EU, streamlining operations. The company ensures compliance with place of supply rules, charging VAT based on the customer's location, avoiding penalties. When transferring properties as part of debt restructuring agreements, Helios applies the reverse charge mechanism, shifting VAT liability to the lender. The company benefits from VAT exemptions on restructured property transfers, reducing its tax burden. Helios reclaims input VAT on construction materials and other business expenses, optimizing its cash flow. The VAT framework in Cyprus provides clear guidelines for taxable persons, cross-border transactions, real estate, and debt restructuring. For businesses like Helios Enterprises Ltd, compliance with VAT regulations is essential to avoid penalties and optimize tax efficiency. By leveraging mechanisms such as the OSS scheme, reverse charge, and VAT exemptions, businesses can effectively manage their VAT obligations across diverse activities. Ready to take control of your VAT compliance and optimize your tax strategy? Contact our expert team today for a personalized consultation. Let us help you navigate the complexities of Cypriot VAT and ensure your business thrives.